Joan Dromey from Computershare. I think most of you were here for the panel earlier. We're a stock transfer agent, and I would say I think we're the largest one in the U.S. However, we didn't get into the market of dealing with private companies until about 2 years ago. So think of my little group as a startup within a larger financial services company. Computershare operates in about 38 countries worldwide. We have about 6,000 clients in the U.S., and several hundred of them are microcap and privately held companies. But until about 2 years ago, we didn't really have a product that was designed for private companies. But we had been looking at what was going on in this space and the opportunities that were presented by crowdfunding and all of the changes in regulations. And I think we live in a very interesting time here. There's an interesting confluence of regulatory changes, new technology, and new rules for capital formation, and it presents a lot of opportunity. So my first job as the product manager, my manager said to me, go off and see if this is a viable business for us. And I went off and I looked at that. Of course, my first question to him was, do I still have a job if it's not? He said, we'll find something for you to do. So I went off and I looked at the numbers, and my background before Computershare is I raised private equity. So someone said earlier, has anyone actually raised capital? Yes, I have. I used to raise several $1 million a year. That was BC, before children, and before Computershare. So it was a while back. But it was really interesting to me to look at what was happening in this space and see what was going on in terms of, I used to raise capital under the old rules. Now we have new rules and new ways of doing that. So my first job really was to design a product that worked for private companies that was cost effective for them. Because I think if any of you have dealt with Computershare in the public company space, we probably were more of the high price spread. And one of the first challenges for me was internally to say to people, you know, if I have a company with 27 investors, which I have had once upon a time, you can't charge me that kind of money to keep the books and records of who owns the stock, because it just financially doesn't make any sense for me at all. So we worked at getting the product to be cost effective, and I think one of the things that I'm finding works for the clients that we have and the prospective clients that are coming to us is we're kind of one-stop shopping. We became a transfer agent in 1978, so we didn't start doing this last month, and we're not getting out of the business next week either. I think that you find that in a growth arena like this, there's a lot of funding portals out there. Some of them aren't going to be around next year. Some of them will have consolidated. Maybe some of them will have gone away. I think Computershare will probably still be in the stock transfer agency business, and I think we'll be doing more of this kind of business. People come to us for a variety of reasons. I think one of the reasons is we are like the one-stop shop. So we can start with your seed capital. If you're doing crowdfunding or whatever, we can do annual meetings, we can do corporate actions, so we can grow with these companies as they grow, and I think there will be growth. I think one of the things that's interesting to me here and listening to what people have had to say is there's a lot of talk about liquidity, but as I talked earlier with Steve, I think one of the things that I think is going to be interesting to see what happens with the space is, in my experience, illiquidity comes with a premium. So one of the reasons that private placements have always had good returns, not all private placements have, but a lot of them have delivered high returns, is to put in illiquid money, people expect a higher return. So if we make all these securities just like everything else, I'm thinking that premium is going to go away. So I'm not sure that's the best pathway. What I do think is interesting is that Regulation A plus straddles the space between public and private. It blurs the lines. It is the mini IPO. It's less costly to do. I think Steve is absolutely right, is that everyone's figuring out probably how to fly the plane as it's going down the runway, because no one really has figured out exactly what will work, and people are doing a lot of different things. I thought it was very interesting that Steve's chosen to go kind of a blended route where using a broker-dealer network, which is something that I don't think that many other people have been considering. Some people are going direct, and other people are doing things that are more like structured redemption programs in an effort to supply some liquidity, but some limits on liquidity. So I think a year from now, if we do this conference again, which I suspect we will, there will be a lot more data out there, and we will have all learned a lot from it. But I think this is a big space with a lot of exciting things happening in it. I know that I refer a lot of people to lawyers because what I'm finding is, oddly, people will contact us out of the blue because we come up, I think, probably when you Google search, and they're looking to raise money in a Regulation A+ or CF offering, and they want to know if we know lawyers that understand how to do those offerings. So I have a list of lawyers that I refer people to. See me if you'd like to be added to the list, because there does seem to be a lot of demand out there. And we're looking for other people to partner with to, I mean, I know I had some conversation with Cynthia. I really do think that education is key in this space, because to keep everything moving on a good track, we need to minimize the crash and burn factor and the negativity from investors. And I do think there are going to be a lot of people, especially under CF, that are going to buy something they didn't quite realize what they were getting or not getting. So I think it will behoove all of us to pay some attention to that and help people out with issues like that. Does anybody have any questions? Yes.
Do you have a product that manages, it's like a service or a product that manages the investors, their investment, their accumulated preferred, and so forth?
We keep the books and records. When you say manages their investments, are you talking about investment advisory?
Books and records, that's all.
Yeah.
For the, not of the accounting of the company, but of the
Oh, from the investor's standpoint? No, we have an investor portal where if the investor has investments that we keep the books and records for, you'd see all that in a portfolio. But we don't do portfolio management, and we don't supply the ability to keep that information. It's more, the issuers are really our clients rather than the investors. Yeah.
So from your standpoint in the world that you live in, is it true that a broker-dealer managed sort of offering, you would end up, or you might end up with a far smaller number of records that you have to keep track of because the security
Yes.
is held in street name or something like that?
That would,
Helio, it's
yes,
1,000.
that would be correct for a lot of offerings. For a Regulation A+ offering, if the broker is keeping those books and records for the street position, then we do, that's pretty much mirrors what we do for a publicly held company. So we're keeping the registered holders that have shares in their own name. And then if a company pays dividends or does return of capital, then we would pay out to the street position. So we have an account on our books for Merrill Lynch or W.R. Hambrecht or someone like that. They do the underlying, yes. But for a lot of other alternative assets, like Regulation D offerings, a lot of broker-dealers won't keep those records in a street position. And so for a lot of alternative assets like non-traded REITs and Reg D, B, and C offerings, it's all in the investor names. And we have an investor portal, an issuer portal, and a broker portal. And I think probably one of the attractions for a lot of private companies to us is we actually started as a technology company. It was software as a service. And so in a lot of ways, Computershare still thinks of itself as a technology company as much as a financial services company. So we invest a lot of money into our technology, and we invest an awful lot of money into lovely things like disaster recovery, data security, and business continuity, all of which are things that small companies probably should outsource, because they shouldn't be making investments in that if their core business is something else altogether. So I think that's another reason that things outsource. Mm-hmm.
I've heard that Helio had quite a bit of trouble moving the accounts from the transfer agent to the brokerage.
Mm-hmm.
And I know that I know your firm very well, that you have everything held electronically as direct registration. And I wonder, would it be an easier process for you to get a Reg A offering stock from your transfer agent into a brokerage account? Do you have a methodology worked out for that?
I think that what I would have to tell you there is, because this is a new process for everyone, I think we would have experienced some of the same issues unless people had dealt with certain things up front. One is the broker-dealers are really unaccustomed to this type of security. And so broker-dealers like things to clear a certain way, to be on the books a certain way, and to fit into an existing process. Because Reg A plus is new, and because every issuer does things differently, so they may have different bylaws, different articles of incorporation, their offering memorandum may have specified certain things. I've seen companies that I've dealt with over the past couple of years, they're privately held, and they've originally said they wanted to issue electronic shares. Now, we don't do everything electronic. We do both non-DRS book and DRS book. But if you're doing DRS, you're a DTC participant. Most companies, I mean, maybe all Regulation A offerings will be. I tend to doubt it. It really is kind of dependent on how many investors you have. I think one of the things that I've learned in watching a lot of this is that for companies that I'm dealing with, we're trying to provide them with some degree of education and different pathways to choose. That if you're this big a company with this many shareholders, maybe you want to look at OTC as your pathway to liquidity. I actually had a private bank that, this is actually sort of funny. The relationship manager called me and she said, I think I need you to talk to my client because she thinks they've gone public. And what it really meant was they had gotten a QSIP, and they were, I think, on the pink sheets or one of the bulletin boards, and she thought that meant they had gone public. Now, I have to say that when we had the conversation, I said, but Crystal, I said, if you remember originally in your offering, you said you wanted us to issue book entry shares, but then later you all changed your mind and said that you had to issue paper certificates because your bylaws and your articles and so forth and your offering memorandum were not conducive, according to your counsel, to issuing book entry shares. And she said, that's true. I said, so now that you have your stock listed or registered with to trade through OTC, everyone has paper certificates. So how exactly are you expecting this to happen? I said, because from our standpoint, that would be a transfer. The paper will have to come in and it will have to transfer to the new owner. So she said, oh yeah, that will be a problem. And I said, yes, it kind of will. And so then we had to figure out ways to, I said, and by the way, from what I can tell, you don't even have a market maker. So your stock really isn't trading. So really, I don't think you should go out and tell your shareholders that you've gone public because you really haven't. So this is the kind of thing that I refer to when I talk about education, because this was definitely an education process. So if everything is in place, you can, in fact, have the shares transfer electronically. For most of these types of companies, it's probably going to be a global certificate at DTC, and then we'll be able to clear against that position.
But you have to set all that up in advance.
Yes, you do. So these are the kinds of things that it's really important to educate the issuers about. And it also involves knowing what the issuer is trying to accomplish. I mean, for a private bank with 350 holders, to ask me about, can we sponsor your application for DTC eligibility? Well, that's crazy. Why would you spend that kind of money? You have less than 400 holders. It doesn't make any sense. So, I mean, I think it's just, there's a lot of learning going on in this space, and there's a lot to learn. And there will be more, and there will be more fallout from things like this, too.
Do you think that because Elio, according to them, only 14% of their shareholders requested their shares be transferred to a broker?
Mm-hmm.
That's because of basically most of the people invested were ignorant of the process and they thought they had shares.
Not necessarily. I mean, I think when you're buying shares direct from the issuer, there's a lot of people, and I think the millennial generation falls into this category. They kind of like the idea of owning direct, and I think the funding portals foster that. I also think that can work. But what that does do is disintermediate broker-dealers, which lots of brokers are nervous about. So,
I'm one of those shareholders that's holding the 14% still in that transfer agent's account.
yeah,
How do I sell them without transferring them first to a brokerage account?
it depends upon, and I don't know what Elio's arrangement is. It depends upon whether they have a sales facility with the transfer agent. I would suspect that you probably have to move them to a brokerage account.
Excuse me.
Yep.
So I just wanted to touch on Jean's comment about, since we are the transfer agent for Elio.
Okay.
Should allow you a little bit, kind of here, for the microphone.
Oh,
Yeah,
it was
or
somewhat
repeat the
implied
question.
that, being that this was the handled. I think it was more of the number one, 6,700 shareholders is pretty unheard of as a publicly traded company. So there was the ramping up, the education was
Yeah.
negligible from the issuer to the shareholders. So
Mm.
we fielded a lot of the calls. It wasn't that we didn't have the right direction for them. The shareholders were somewhat unsophisticated, which I touched on earlier.
Mm.
So we were directing them to the broker dealers that could help them and assist them. The E-Trades and the Merrills and are also learned. It's a learning curve for
Yes,
everybody.
I agree with you.
So it's something that everyone has to be the first at something. And, Elio did a phenomenal job, and all the partners, OTC Markets, and everybody that we worked with did a fantastic job. But it's still a learning curve, I think.
Did you find that most of the shareholders did have a brokerage account already, or had they simply bought direct and you needed to tell them you have to open one?
Many of the shareholders that I spoke with, I don't feel those calls, I'm not
Yeah.
an officer, but many of them did not have, they had no clue.
That's what I
Didn't know
thought.
what to do with the certificate, they didn't know what to
Yeah.
do. Who could they go to? So we obviously have partnerships with many, not partnerships in that sense, but referral sources that we recommend.
Sure.
That are familiar with this space. And as the space continues to grow, and we've all become more educated and familiar, we'll have a better idea of where to send these people.
Mm.
But for
And
me,
the issuers are unsophisticated. I didn't know any of
That
this.
that is
This was all things like the stuff
that is a huge part of the. That is a huge part of it, and I actually have something I'm working on now. This gentleman called me up out of the blue probably 2 months ago. He's doing a Regulation S offering, which is the offshore equivalent of a Reg D offering. Very unsophisticated about, knows some generalities about securities. Smart guy, understands like the whole board of directors and resolutions and all that good stuff. But one of the interesting things about that is they have founders stock, several million shares of it, that they've issued to probably about 20-something people. And some people have gifted or donated that stock or some portion of that stock. So we haven't taken their records on board officially at this point because we're still working through, well, what do you want to call these and what exactly do you want us to record about this? Because these are the kinds of things that the issuers don't understand. All he really wants is a way to distinguish his founders' stockholders from his Regulation S holders, and then they're also going to have a management incentive plan. And he wants to know which shares were gifted to other people, which happened on the same day that they were granted out. So all that, in order to have that happen, we have to know all of that information and be able to record it appropriately. Otherwise, it's poof, gone. And when you go to look for your cost basis to show that you made a charitable deduction or whatever it was, it's not going to be there. So these are the kinds of things that issuers really don't understand, and it can be very important to them. So as I said to someone earlier, sometimes I feel like the UN translation unit because I'm, like, okay, tell me what you're trying to do here, and I'll see if I can translate it into Computershare world speak and probably technology world speak. So communication is a really important part of this, and so is education. And we're all going to learn, next year at this time, we're all going to know a whole lot more than we did now, and we'll have better war stories than the one I just told.
Hopefully we have you next year here to tell us all about it.
I'd be
Thank
happy
you
to
very
come back
much, John.